Good morning to all. My name is Michelle Carr, and it's my pleasure to welcome you on behalf of the Department of Accounting at the Business School in UCC to this morning's webinar, which is going to discuss some of the challenges and issues that have arisen during the last couple of months as a result of COVID-19 within the accounting industry. The outbreak of COVID-19 back in March is and will continue to have a big impact on the economy in the weeks, months and years to come. And organisations everywhere are carefully considering their own very unique circumstances and the risks and their exposures and the impact that they're going to have on their financial reporting, their risk management, and very often on the very premises of the businesses models upon which they operate. To discuss these issues and many more, I have the pleasure of kicking off this morning's session by welcoming an array of very experienced and talented speakers who are going to talk to us some about the emerging issues that are influencing industry at large and the accounting industry in particular. To begin, I would like to kick off by introducing Rob Murphy, a graduate of UCC, who is currently undertaking or is currently part of KPMG's graduate training program. And Rob, thank you for joining us this morning.
Hi Michelle, thanks for having me.
Rob, if you don't mind, you might just briefly begin by kind of filling us in on your background and how it is you became or came to be on KPMG's graduate program.
Yeah, so I started in UCC did a bachelor's in commerce in 2014. So I suppose just in my time there, I started out, I wasn't too sure what line I wanted to go down, so I just kind of started moving towards the accounting modules then for many different reasons. And before I knew it, I kind of had exemptions going into my Cap 1 exams for the ACAs, and I suppose then kind of throughout the career fairs within UCC, KPMG were always, well, that was kind of something that stood out to me. But I also knew a lot of people who had worked in KPMG, and I knew the good environment, and so it kind of appealed to me. So I went through the milk rounds, and I was lucky enough to get a place there. And in 2018, I graduated with a bachelor's in commerce, and I started my graduate program there now. I suppose coming up nearly 2 years ago.
Okay.
How quick it goes.
Okay, having had 2 years done, Rob, in the office, and having moved office onto South Mall and been really comfortable and settling in there, what was it like on in mid-March when all of a sudden everybody had to pack up and remote work? Can you talk to us a little bit about how KPMG managed that process?
Yeah, I suppose it came around very suddenly, like a lot of places. We were lucky enough to be in 85 South Mall one day and enjoying the views over the city, and then the next day we were home with our second screens and working remotely. So I suppose initially it was a bit of a shock, but KPMG put in they have a well-being committee, so they kind of set a project. Their main concern was the safety and health of their employees. So each week we kind of get a wellness email, and they give us maybe healthy recipes for those bakers out there, or online sport home workouts and stuff like that, just tips and tricks to manage working from home. And I suppose they gave us, digitally prepared us with the likes of Zoom and Microsoft Teams, and StreamYard now, which allows us to do things like that. And I suppose then as well, motivation was a big thing with working from home. So it was keep us actively engaged as well. So we've regular meetings with our performance managers and with the manager and the job we're on. So that's good, just to make sure that we're kept busy and kept motivated, I suppose.
Super. I hope you've baked lots of nice things.
One of
the biggest challenges, I think, for service or professional service firms such as KPMG has been managing the change with their clients and how they interact with their clients. Can you talk to us a little bit about how that has been managed and what your experience and how you've kind of dealt with that change?
Yeah, I suppose when I joined KPMG, I joined KPMG audit. So a big part of our job would actually be on client site with the client. So I suppose moving away from that, then I think the main goal that we had was actually stay connected with the client. And I think that's worked quite well. So initially, kind of at the start of the engagement, the main thing is to to find, say, the platform that suits us both. So you might have some clients who actually prefer an email, and then others, the more technically advanced, would Zoom or Teams. So once we kind of establish that, then we're actually kind of connecting more on a personal level with our clients now. I suppose we're both going through the same thing, and a big part of it would be managing expectations. So both our deliverables and coming from the client. So yeah, I suppose it is tough, but everyone's kind of getting used to it now, and it's more of providing solutions, not problems at the moment. So it's so far so good anyway.
Yeah, and I can just imagine, Rob, that you're bringing clients now into your home, but more often than not, your clients are inviting you into their homes, and into their kitchens and sitting rooms and playrooms and everything else.
Yeah, you'd have not so much me, but you'd have kids jumping on the calls and everything, and we're able to empathise with the client, and especially during this early stages of lockdown, when even myself, I wouldn't have many people to talk to, so it's even nice to have a quick chat with someone new, apart from your family.
Yeah, no, I can understand that. Finally, Rob, just can I ask you a final question? A big part of the KPMG grad program that students talk about over the years are the excellent kind of team building and communication skills that are developed. Like, so working in a team for KPMG as part of a graduate program for 3 or 4 years really stands to you going forward, I suppose. How, at a graduate level, have you managed to maintain that level of team and in this together, I suppose, even getting through the exams and everything else?
Yeah, so I suppose within the Cork office, it's quite small compared to the likes of Dublin. So there's great camaraderie amongst us. We're all very good friends, and we might have been in college together, or we might have just met when we came in. So I suppose the likes of Zoom now and Teams, we kind of every Friday at 11. It had to be rescheduled today. We have a virtual coffee with a few of the lads. So things like that are good. Like, I know Wednesday we have a virtual quiz, where there'd be spot prizes and stuff. And it's funny because at the beginning you were a bit hesitant going into them, but now as soon as you get used to them, they're great crack and enjoyable. And I suppose just in terms of in work, then we probably every day nearly we have a Teams meeting at the end of the day for a catch up. So I'm actually talking to my managers more now than I would have when we were in the office. So yeah, communication's good, and I suppose just kind of being conscious as well of, say, I'm 2 years into it, so I have a small bit of experience under my belt, but there were some UCC placements that are only a month in the office. They came in I think it was January, so they have a month in the office and they're still working. So I suppose it's just being conscious that to help others as well, and it's very easily done through sharing screens on Skype, and it's so it's just a matter of getting used to it and working around it. But the team spirit, well and truly, it's still there.
Good, that's great, Robin. Thank you for being compassionate to our poor placement students. We did feel for them at the time as well, and I hope you get to read the coffee. Listen, Rob, thanks so much for joining us this morning, and hopefully you'll stay on the call and answer some questions from our graduates and our current students at the end, perhaps.
Definitely, perfect.
Super.
Thanks. Cheers.
Yeah, so without any further delay, I am going to move on and introduce our next guest, who is a partner in charge of the Cork KPMG office and a long-time supporter and alumni of our business school, Barrie O'Connell. Morning, Barrie. How are you?
Hey, Michelle. How are you? Delighted to be on.
Thank you again for joining us this morning. Barrie, could I begin by talking to you about that fateful day back in mid-March when you and your senior leadership team were in charge of moving your entire team very suddenly within a couple of hours out of the Cork office and all working remotely, separate from each other?
So it's certainly a day I remember well, right? It's hard to believe now that it's over 3 months ago and we're kind of in week 14 of working remotely and how time moves along. It's interesting because I had a fairly significant audit committee meeting that day as well. And suddenly we found we were, not going to be in the office from then, which we didn't know was that going to be a day, a week. But what's interesting is how we were able to mobilize. And I think both from our team's perspective and from our client's perspective. On the team side, as Rob mentioned, it is about, safety was our number one priority. So when the decision was taken that we were going to work remote, it was amazing to see that morning as we all moved from being in the office at 9 o'clock to suddenly all working remotely. That led us into a lot of communication that day in every direction, I can tell you, whether that's nationally, with clients, with our teams, with stakeholders. So just a whole series of how we're going to stand this up. And we probably didn't know exactly what we were working our way through that day, but we did. And the commitment from all the team was absolutely enormous. And I think that's been a theme in terms of their resilience and getting on with this. And the fact we're so tech enabled, I'm not sure if this happened 5 years ago, it would have been as easy. But in that week, and even continuing to this day, we have over 3,000 people nationally logging on remotely on VPN into the KPMG network to deliver the work that we continue to deliver, irrespective of all the challenges to our clients across our functions.
Yeah, no, it was. It's a day I think all of us will remember. A little bit more into that, Barrie, if I could talk about how it is that KPMG has had to very quickly reimagine its processes across all horizontal and vertical channels. And in particular, again, back to the question I asked Rob about engaging with clients and the challenges that we're faced there, because I think it's very relevant to this industry in particular.
Yeah, no, definitely. And maybe I'll start there on the client side. As we left the office, actually, during that week, all our clients were leaving their office and going remote as well. And whether that was Indigenous clients or whether it's FDI clients. And indeed, as they looked internationally, their corporate headquarters in the States were also starting to go remotely. So it's an unusual in this crisis in that actually it's pervasive across the globe rather than a localized point, right? And actually our first port of call was just checking in with our clients and really understanding what was going on in their world. What issues were they starting to face? Were they supply side issues? Were they demand side issues? How their employees, they may not have been as fortunate as us that would be all laptop enabled and would be enabled to access VPN as we had. But it's been really interesting to see people how adapted their business models quite quickly. There's a range though. So some clients have continued with your essential business, maybe in the pharma or food sector, to deliver, albeit their business models may have changed. But then you've other clients that actually have had very significant downturn and, has revenue collapsed by 80-90% in some sectors in retail and hospitality in particular that we read about. So there's a whole range of experiences, and it's important just to get on the phone with your client. We're kind of working through ourselves, understanding their perspective, understanding their issues they're trying to come to terms with, and maybe offer a view or a point of view or insight from what we're seeing. Because one of the things we were doing in the first couple of weeks actually was linking internationally, and with our Chinese firm or Italian firm or Spanish firm, who maybe were a couple of weeks ahead of us, and understanding actually the impact that was likely to appear and how we'd all adapt. Because again, there is no certainty even still, and how do we react and respond? I think it's been inspiring to a large degree though of how companies in Cork and throughout Munster have stood up, some in very difficult scenarios and some have closed completely with some very difficult decisions to make for their employees and for their business models. But we were linking with people on the wage subsidy scheme. My tax colleagues here trying to support people. Was that the right scheme to apply for? How would you operate it? What would that mean into the future? And I do think some of the government supports have been helpful in that regard. But I've seen a whole range of emotions across our clients and experiences that I think is we're hearing a lot about on media, and it continues to be the case from a client perspective. So linked to that, then to the first half of your question, we did have to change our work practices pretty fundamentally. But have we continued to deliver audits? Absolutely. And that's back to being tech enabled. So we have a number of 31 March year ends, which I know Declan will talk to some of the issues they face under COVID and collapse in demand, asset valuations, etc. And indeed going concern considerations for some. But other audits got closed out. Does it take a bit longer? Does it take more organization? But when the clients are operating remotely and they're on Zoom and Teams, and to be frank, I've probably found myself that in some ways Teams is more effective and some technologies than what we were doing anyway. So I think it is pause for thought in how we're going to operate in the future. And certainly through the next audit cycle, it's likely we'll be in some form of remote working over the next 12 months, given the social distancing rules that continue to be in place. So and that's audit. Tax, again, working remotely, delivering solutions. And it's fair to say that there is some downturn in transaction activity. So some business units have seen a change in activity linked with our clients. But I suppose it's about positioning to how we might recover and move beyond and get to the expected recovery. which we don't know when it's coming, but I do believe will come.
You're leading into my next question perfectly, Barrie, in that I was going to ask you about many commentators in kind of the last couple of days and weeks have kind of suggested that hopefully the economic impact of COVID might not be as devastating as we first feared. Could you give me an idea of maybe which sectors you think would be critical to rebooting Ireland's economy and which will make us different from other European countries that may struggle more?
Yeah, I do think that's a question we need to think about carefully, actually, because, you know, it is having a very significant impact across all sectors, and there's no sector untouched. Some sectors perhaps are more resilient, whether it might be tech, you know, in terms of how they are, you know, have an opportunity in this crisis for some companies in the healthcare area, for example, right? But then, you know, you take healthcare companies in the elective area, which actually has seen a downturn in demand through this. And we talk about retail and hospitality that are challenged. I do think, you know, and I'm not an economist, but there's a whole range of forecasts out there. You know, the only certainty is that it's uncertain, and you know, you look out, it'll be a tough 2020. And it's at what point it'll start to come back. Could that be 2021, 2022? And when we see the recovery, and perhaps you look at aviation are probably saying it'll be a period of time before, you know, that sector might come back, but hopefully other sectors will come back more quickly. I think on that, it is critical, though, that we would all focus on, well, how is your business model adapting? And I've had a couple of conversations with clients recently where maybe there's been a downturn in one channel, but perhaps another channel has actually seen an upturn. And how do you focus on that channel and diversify it and grow it profitably? Because there is extra cost in the supply chain now for lots of things, for most industries, right? I think from a Cork perspective, you know, I think it's really important, and this message now coming out from Chamber and from others, to shop local. I think that's really important. And, you know, the staycation idea for this summer, that's certainly what I'll be doing for my family now. And it's a different plan than I had. But I think it's really important where you can spend local, that we do spend local. And yes, we should be procuring things online, but is there a local provider that might be able to ship that product to you rather than an international provider? Because I think it is incumbent on us all to get back out there. There's no doubt that consumer sentiment has taken a huge knock, but can we get back in some way about supporting local restaurants and their takeaway menu? Because ultimately for jobs, at the end of this, that SME sector, Indigenous sector, is absolutely critical. And how we support them ourselves and through government is very, very important. Now, that's all in the context, obviously, of absolutely making sure that the health protocols are absolutely adhered to and government guidelines. But hopefully, given the, you know, the scores we're seeing over the last number of weeks, then the acceleration that we've seen from government in lifting the guidelines will allow the consumer to get back out there in some way. And again, I'd say shop local. Yeah, absolutely. I think we're all trying to do that, a little bit of that this week. Barrie, finally, many of the people that are listening this morning are about to embark on a graduate training program next year, or are going to be making decisions around what they're going to be doing over the next couple of years. Can you give us a little bit of insight on what the KPMG grad program is shaping up like next year, given the current regulations that you just spoke about and the constraints that we have to operate within? Sure, and I think our mindset is that, you know, there will be recovery, and our principles are, you know, about protecting our business and keeping jobs for our teams, right? And with that in mind, we are standing behind all the grad recruitment we've done for the autumn, and those people will be joining us as were recruited last year. They might join a couple of weeks later, and then the program they'll join will probably be a bit different. That'll be virtual rather than face to face, that I know Rob mentioned earlier. But, you know, while a lot of it will be virtual, we will have parts of it with appropriate social distancing guidelines. We do envisage being well back in the office by then. And, you know, we'll be then getting people onto jobs, and already in our own internal, are we scheduling people to jobs? 2 audits for next year. Absolutely, we are across the business. And that's the same nationally, right? We have an intern program over the summer. That intern program now will be fully virtual. That will be a very different experience, but we are committed to it. And you know, for 3 weeks, people will get a mix of business interaction through a number of management team members, and also through our HR teams in terms of giving them experience over the summer. As Rob touched on, our placements obviously were in, that started in January. A number of the March placements were deferred, but we look forward to getting those programs back in due course. And I'd be optimistic as well for the group through Milk Round that would look to join us in October 2021. Everything we see at the moment is that, you know, we'll be out there in the Milk Round looking to recruit UCC grads. UCC is a critical part of the recruitment machine for KPMG, and the quality of the people that we get, not just in Cork, but nationally from UCC, from CUBS and from broader disciplines, always perform, above the mark, which I love hearing from my fellow partners throughout Ireland. And I think it will be a different environment. It will be a new reality in how we work.
Yeah.
It'll be a new reality in how we work with clients. But I think if people on this webinar think about, well, as I come out now into industry, how am I positioning myself, maybe with tech or new innovation, or how are they getting positioned with data, and some of these trends we're now seeing? Because, for example, one quote I heard recently was interesting. There's been more digital transformation in the last 3 months than there was in the previous 10 years. So that's where it's going to be at. And that's going to create opportunity for bright young grads coming into the marketplace, and how people are set up to be in position to join us in 2021. Will it be different? Yes. But will we be driving ahead? We will, and making investment. And it's about that balance. And hopefully at that stage, we'll have put COVID behind us.
Super. Thank you, Barrie, sincerely for joining us this morning and for being a continued supporter of our school and our graduates, obviously. Thank you, and we'll be available at the end to answer any questions that people might have. Super. Next, it's my pleasure to welcome Declan Maunsell, an alumni of the BSc Accounting degree, who now occupies the role of Audit and Insurance Partner at PwC in the Cork office. Thank you, Declan, for joining us this morning.
Morning, Michelle. How are you?
I think you're going to talk us through some of the financial and audit implications associated with COVID-19.
Exactly.
Which is very timely and very interesting. Declan, I think you're going to share some slides with us.
I'm indeed, yeah. So let me get the technology working here.
Perfect. Thank you.
Okay. So I'll kick off, so Michelle, if that's okay.
Thanks, Declan.
So I'm going to set out the financial reporting and the financial implications of the crisis, and clearly it's been a very turbulent time for accountants and auditors. So I'm a partner in our Cork office, as Michelle mentioned, and I'm going to cover these two broad headings: financial reporting and the auditing. So as Barrie outlined, there's very few businesses that are unimpacted in some shape or form. I mean, clearly what we're going through is a very significant crisis, and in terms of financial reporting, it impacts issues like the measurement of assets and liabilities, additional disclosures, and then consideration of an entity's ability to consider as a going concern. So in terms of the dates, I've set out a little timeline here from the end of December to 31 March. Clearly at the end of December, we didn't know the scale of what was coming down the road. There's probably some noise from China, but we don't see COVID as having any material impact on the measurement of assets and liabilities at 31 December year ends. If you look at timeline, then what happened on the 30th of January was the WHO declared a global health emergency with thousands of new cases emerging in China. And then you fast forward a few weeks to the 11th of March 2020, when WHO declared the spread of COVID-19 as a global pandemic. And looking at those two dates, so very clearly, if you have a 31 March reporting date, COVID-19 is going to impact on the measurement of assets and liabilities. However, with January and February reporting dates, it's a little bit more opaque, and you need to consider some of the things that I've set out at the bottom of the slide there, including the territory. So how exposed are you to Italy, China, some of the earlier countries that were impacted? The industry, to Barrie's point, there were clearly some industries that are more exposed than others. And then your customer base and your supply chain. So for example, if your supply chain is coming from China, you will be impacted earlier than other companies. So overlaying that timeline with some accounting terminology. So as I said, very clearly, 31 December 19, this is a non-adjusting post-balance sheet event. So it doesn't impact on the measurement of the assets and liabilities. On the right-hand side there, 31 March year ends very clearly impacts the measurement of assets and liabilities. But in the middle, it's unclear and requires judgment. Broadly, people are taking that date of the 11th of March 2020 as somewhat a trigger point, albeit it is judgmental. But just to note down the bottom of the slide there, with going concern risk, I mean, going concern is always an adjusting post-balance sheet event. So, if something arises for an entity that jeopardizes their going concern and they're a 31 December reporter that is an adjusting event for that set of financial statements. So I've picked out two examples here of both in the retail sector, actually. One where it's an adjusting event and the other where it's non-adjusting. So starting with Next at 31 January year end, and this is some language that they included in their year-end report. And even though it's a few months old now, it's quite striking in terms of what lay ahead. But it talks about an unprecedented crisis in living memory, but they felt their balance sheet and margins meant that they could weather the storm. It says the crisis will pass at some point, and at that time it will be the work that they do to move the business forward that will determine their future success. But they set out 3 priorities, which I think ring true with all of the other retail clients that we see. Keeping workplaces and shops safe for customers and staff, and obviously that's important as the recovery happens. Preserving cash, and the importance of online, which has obviously been vital in the sector. On the other side, Associated ABF, Associated British Foods, more commonly known to most of us as Primark, reopening today. They're at a March year-end, March half year. So what they set out here was, no impact on their food and ingredients businesses, but Primark itself, they looked at impairment risk, and they felt that the carrying value of their properties wasn't impacted, in that future store profits will return in due course. However, the last line there, I believe Primark have around £1 billion of stock on hand, and they were calling out need for provisions of almost £300 million in those half-year results, which is clearly very striking. So on the financial reporting impact, there are 5 broad headings here that I'm going to run through, but just to keep in mind that this is the whistle-stop tour of the issues, and I'll cover both IFRS and FRS 102 broad issues rather than being specific to either gap. So starting off with non-financial assets, this is our fixed PP&E and our goodwill and other intangibles. Clearly, the carrying value of those assets could be impaired when you look at value and use calculations, fair value less cost to sell, and you look at lower cash flows into the future and changes in your underlying assumptions, and you couldn't probably to include much more extensive disclosures in that area also. On other non-financial assets, things like the carrying value of your associates and joint ventures, whether at either the equity method or fair value. With inventories, you're looking to where you need to write down the value of your stock, obsolescence risks, and in the manufacturing sector, where you have disruption to production and how might that might impact your accounting in the standard costing world. And investment properties similarly carried at fair value, so there could be impacts there. On financial instruments, your receivables, other debtors, the impact of credit risk under both IFRS 9 with the expected credit loss rules, and also FRS 102 in that reassessing your ability to collect your cash from your debtors. On other financial instruments, if there are changes in your borrowing or loan arrangements, where that might lead to either derecognition or modification of those instruments, and also the presentation of those as current versus non-current in the financial statements. Where you apply hedge accounting, you need to be satisfied that the criteria are still met to use that. On revenue recognition, clearly lower sales will need to be recorded as they happen, but there are wider impacts too in terms of IFRS 15 and revenue recognition. For example, variable consideration. If you look at your trends of expected returns, the timing of revenue recognition, if there are doubts around the collection of your cash on day one, and step 1 of the assessment in terms of your ability to recognize that revenue. Some other income statement items, onerous contracts, any unavoidable contracts that you need to provide for upfront. On employee benefits and share-based payment, discount rates impacting bonuses and share-based payments will be relevant. And also, if there are COVID-19 related benefits, if you have a legal or a constructive obligation to pay employees who are self-isolating, that needs to be factored in. And on the right-hand side there, for tax, looking at, if you've asset impairments, that will impact on your deferred tax calculations. And also the wider assessment of the recoverability of deferred tax could be important too. Some of the accounting implications arising from some of the business remediation measures that are ongoing, provisions, we're seeing people take decisions of structuring and redundancies. So when you meet those criteria, IFRS 5 around non-current assets and discontinued operations could be important. Contingent assets, this is where you have insurance claims. You must be happy that they're virtually certain. And the breach of covenants could lead to change of classification on those loans and going concern questions as well. Leases, could have changes in lease terms and the accounting for that under the relevant standards. On employee benefits and share-based payments, there could be some changes arising there too. And with the government grants and the various tax incentives that are available to companies at the moment, it's about ensuring that they're appropriately accounted for under the relevant standards. Going concern, a very big deal, and management need to look out 12 months from the signing dates of the accounts to be satisfied with the company's going concern. And we see people preparing updated cash flow forecasts with sensitivity, including base case scenarios, pessimistic case, and extreme scenarios. On disclosures, lots more disclosures required, including financial risks. You need to call out principal risks and uncertainties under Irish company law. So all of that will need to be addressed appropriately in the accounts. Some other matters, interim financial statements clearly be impacted, and also dividends and distributions. These are a company law matter, but always the directors need to be satisfied that the company has distributed profits and that their fiduciary duties as directors ensure that the company remains solvent and never makes an illegal dividend. Very quickly, some of the audit implications. Going concern, there's a range of areas where a client can end up, either no impact, additional disclosures. You could end up in material uncertainty in the director's report and also in the opinion. Qualification, or if it's not a going concern, a breakup basis. But it's very important that the audit team stands back and reconsiders the going concern position right up until the date the audit opinion is signed. Some other impacts on auditing, ensuring the accounts show a true and fair view, whether COVID-19 is an adjusting event or a non-adjusting event. Measuring assets and liabilities, as I said earlier. Stock takes have been a big challenge in the course of the lockdown. The focus on quality hasn't gone away from our regulators. And clearly working remotely creates some challenges in terms of how we coach our people as training firms. Fraud risk is heightened in the world we live in. Materiality will come down where results come down. Group audits will be impacted in due course. And the impact on controls as well, ensuring that controls continue to work effectively, particularly in SOX clients, and looking at IT risks arising from remote working also. So that's everything I wanted to cover, Michelle. So thank you very much, and obviously take questions later.
Super, thank you, Declan. That was a very considered and detailed presentation, and I'm sure many of our audience, and I'm hoping our BSc Accounting and Finance students that are online will have very interesting questions for you at the end. And can I encourage you, audience at home, if you do have questions for any of our panel this morning, can you start posting them to the private chat? I will be reading them out afterwards, so they'll be completely anonymous. So I think there's a chat function there available if you want to start posting questions. Thank you again, Declan, and I look forward to talking to you at the end in just a few minutes.
Thank you.
Audience, we are going to switch focus a tiny bit now for a couple of minutes and speak to you about some of the postgraduate opportunities available in accounting at UCC. To do so, our programme directors, John Doran and Oliver Brown, are going to come and speak to you just briefly about the programmes and their key unique selling points. John, Oliver, thank you for joining us. Oliver, I think you're going to go first, is that right?
Yeah, sure. Thanks, Michelle.
Okay, thank you, Oliver.
Perfect. So I suppose just in terms of UCC, we're trying to do something that is essentially different within the education sector itself, trying to differentiate ourselves. So UCC education is different. We want to connect our students to the latest discoveries and cutting-edge research to help you become creative, critical thinkers. So in order to do this, we're doing it through what we call the connected curriculum. which we're combining academic learning with professional and community-based learning to develop values, skills, and aptitudes that promote civic participation, social inclusion, sustainability, and impactful global citizenship. So we're also doing this through ongoing investment in the student experience, such as the €15 million investment that took place in the Student Hub, which was opened in August and September there of 2019 as part of the old Windle building. So just in terms of the actual offerings of the college itself, so I'm a director on the program that we call the Masters in International Accounting Practice. So this is what we would refer to as a conversion course for accounting, so particularly suitable to students from STEM disciplines, but not limited to them. So if we take, for example, Rob earlier, who would have done a BCom, and he selected some of his accounting electives. If you were in a situation where you didn't pick those electives, you went for other options, but found accounting to be of particular interest to you, then there is another route without, say, doing John's program later on, the Masters in Accounting, which he'll talk to you about. But if you don't have the necessary requirements for that, but you'd like to pursue a career in accounting, then the Masters in International Accounting Practice may be for you. So it's a full-time program over 12 months, and a particular selling point of it is our 4-month placement that we do have as part of it. So we also offer a significant amount of exemptions for all professional accounting bodies, including the ACCA, ACA, and CIMA. In particular, for the ACAs, we provide all Cap 1 exemptions except for law, which students often study as an extracurricular subject through the program. So in terms of that, just for the requirements, so the requirements are a 2-2 degree or an expectation of a 2-2 degree at the NFQ level 8. So if you're applying from outside of Ireland, then an IELTS score, a English language score of 6.5 with no individual section lower than 5.5 will be required. So in terms of the program itself, we've had some very notable achievements. So one of our students previously placed in the top position in Ireland in the ACCA audit exam and 11th globally in that. So it's a high quality program as a conversion course for which no prior knowledge of accounting is required. So I can pass you on to John now. Just in case you're looking to apply for the program, the PAC code for the Masters in International Accounting Practice is CKL43, and I can be contacted at brown@ucc.ie, and Michelle Gleeson, my co-director, can also be reached at michelle.gleeson@ucc.ie for that. So John, if you'd like to take over for the EMAC.
Thank you very much, Oliver. Thank you. And good morning, everybody. It's great to see you, or at least to feel your presence online. I can sense you're out there. Just the EMAC programme is just contrasted, I suppose, initially with the MIAP that Oliver has talked about there. It is a specialist advanced programme. So in other words, advanced in the sense it assumes people have done a significant amount of accounting previously. And there are 2 entry requirements, just to get these out of the way first. Firstly, people have to have a 2H1, their minimum of 2H1, and in a degree with a significant accounting specialisation. So you're talking about the BSc accounting or the BSc finance, or say the BCom if people have taken up the accounting subjects, or the BCL in business and law if people have taken the accounting options. Okay. In addition to that, and I suppose our programme is primarily oriented towards the Irish Charter, the CAI. So we also expect people to qualify for full exemptions from Cap 1, to have them already prior to starting the EMAC. Now, in fact, normally people come from programs which the program qualifies for the exemptions, provided students have taken the right subjects. And of course, students have done well in the accounting subjects in those. Okay. Now, in the case of some programs like the BCom from UCC or the finance, business and law, people may almost have Cap 1, but they may be missing one module, one Cap 1 subject, for instance, taxation in relation to the BComs or the BCL, or law, business law from the BSc finance. In that case, those students can qualify for Cap 1 by taking the outstanding Cap 1 subject as an external candidate. Now, normally that test would be in May, a few weeks after the end of our undergraduate degrees. This year, the May sitting of the Cap 1s was deferred and is going to go ahead in August. So there is still time to register for that and people to prepare for that if they still have one subject outstanding. So if we just roll forward to the next slide there. Yes, I suppose why go through this route? It's not the only route to becoming a chartered accountant. People can take direct entry, as Rob mentioned there previously. The main reason, I think, if I were a student, in fact, I did it in my own time many years ago, longer, okay, is the first two items here. If you go in direct, you are studying and taking CAP 2, which is a pretty big exam with quite a lot of material. Doing an MAC enables you to qualify through CAP 2 and get the full CAP 2 exemption while doing it through full-time study. So you're front-loading study and the examinations, and that's, you know, a somewhat maybe less onerous route, I think, and also particularly for those who are planning to go into the tax areas in firms, it does mean that there is a sense of gap year after the MAC where people go in and they can't sit the final admitting examination for another 2 years, and in that people often pick up and complete a significant portion of the Institute of Taxation exams during that time. It also may allow some people to improve on their undergraduate degree. Most of our students are placed and sponsored, but there may be people who aren't, and those students on the MAC have the attention of the Big Four firms because they know that they will be coming out much more advanced than just with an undergraduate degree. And an interesting one is the second last one there, which is a master's degree. In many ways, it's leading up to qualifying as a chartered accountant, but it also is a recognized qualification internationally in its own right. Now, that can be significant later on in people's career in certain circumstances. It probably is not a big deal in the early part of their career with the Big Four. The Big Four will treat MAC graduates the same ultimately as their other graduates entrants. But for some career choices later, for instance, with multinationals from some backgrounds, for instance, German multinationals, Belgian ones that come from countries where there's a big emphasis on qualifications and credentials generally across all professions, having a master's degree carries a little bit of weight in itself. Also in some industries where pharmaceuticals come to mind, pharmachem, where the products and processes themselves often need a high level of certification. Those firms often adopt that approach towards their people as well. And so when they're looking at either hiring people or advancing people within a firm, having that extra qualification may carry a bit of weight. And of course, the last one, last but not least, is people get a chance to enjoy another year in university. You often find people who are involved in everything from drama to sports teams finding that they like the idea of doing another year and doing a master's. Looking at the next slide there, why the master's at CUBS? Well, it's front-loading your exam requirements, I've said previously. You're getting technically your full exemptions from CAP 2 from the chartered exams, which means you only have the FAE to sit after the MAC. And that is 2 years down the road. It's a different type of examination. And in fact, we try to help people prepare for the FE as well as get the exemptions in terms of, we have quite a lot of case study or some dedicated case study module within the program. We prepare people initially for the first part of the CTA, the Chartered Tax Advisor exams. And as I said, people then often progress and take those immediately after the MAC, an extra round of those. Our alumni, the graduates of the CUBS MAC, have been doing very well in the professional examinations at FAE level. I think every year that I can think of them in recent years, they've had a higher pass level at FAE 2 years down the road than the national average. And in fact, we've had quite a number of prize winners, including the first place prize winner in 2017, and many other people who've been in the top 10 who are published list from the chartered. So that's about it there. Our PAC code, if you're interested, is CKL26. All applications, as with all of our CUBS programs, are through PAC, the central application. This is the postgrad equivalent of the CAO, PAC. You can contact either myself or Michael Farr, my co-director, by email or just emailing mac@ucc.ie, or the Big Mac as we sometimes call it. Thank you very much. Thanks, Oliver.
Thanks, John. So in terms of why a CUBS Masters, akin to all our CUBS degrees, accounting modules and programs are designed with industry in mind. We teach using a mix of theory and real-world examples to ensure that your skills are career ready as soon as you graduate. So we do that through knowledge, communication, and application. So think accounting and CUBS, think UCC.
Very good.
Thanks very much, Chris.
Thank you.
Thank you both sincerely. Our programme directors in UCC, most definitely play a pivotal role, and especially in our department are critical to the success of our graduates in their future employment. They're well trained and well looked after. So thank you both. That brings us to the end of our formal presentations, and before I suppose we move on to kind of questions and answers, I would like to thank everyone all 155 of you that have logged on this morning, and we hope that you found it beneficial and engaging. At this point, I'd also like to pay particular thanks to Rob and Barrie and Declan and PwC and KPMG in general for their support of the business school and its expansion over the last number of years, and going forward we look forward to developing our strategic relationships. But I think we're going to get everyone back on screen together for a few minutes now, and I have a couple of questions that I might pose to the panel, if that's okay. Okay. I have one more serious question, guys, and then I have two that are a little bit lighter. The first one is around capital and access to capital. This is my last serious full question, but I think it's quite important. I suppose we're hearing a lot about the importance of organisations having access to capital in the next couple of weeks and months in order to ensure survival. I think there's widespread agreement that the measures put in place by government to date have been very helpful. So I suppose my question really is how long do those can and should those supports and measures stay in place? While trying to balance the need to keep the economy going, but also making sure that we don't run into fiscal problems. Barrie, Declan, Rob, would any of you like to take that one?
That's the easy question, is it?
Yeah.
No, I think Michelle, it has been very important, right? And as you've gone through this, actually, back to the comments earlier, where businesses, where revenues have collapsed, cash is king, and turning, stock or debtors into cash and cash to survive. And then Declan touched on the going concern principle, and there's a whole range of experiences out there where are we using emphasis matter paragraphs? Are companies challenged? Some companies will not come through this, right? So access to capital is right up there, along with the safety of employees as being critical. I do think government acted reasonably quickly here, actually, and I do think things like the wage subsidy scheme, particularly for the Indigenous sector, has been very important and has been very widely used. It is expensive, and I know now it's been expended for a couple of months. And hopefully, as people, we are seeing now that people are coming off that and getting back into work, and hopefully that will continue. But minimising, managing the job losses that are going to come from this crisis is critical. On a more macro level, though, I do think there's further work required for the SME sector and the Indigenous sector in terms of getting capital quickly to them. I know there's been a number of initiatives, but there is some noise, and I see it from the startup sector in particular, about getting quick access to that money and how substantive it is. And I think more needs to be done there. And we've made a submission to government as KPMG last week to the Department of Finance, which is available online, with some initiatives around that and how you get cash in the system. At a very simple level, when money goes into a hotel or whatever, it probably goes 5 or 6 times through the cycle about paying suppliers, right back through the whole chain. And it's that multiplier effect we really need to get back in the system. As a final comment, I do think ISIF, it has a role to play for larger ticket capital. And you look at the pandemic fund, and I do think some large businesses will need to access that. And again, we need that a bit like the UK. And I'm a Spurs supporter. It's hard to believe that Tottenham had to access 200 million of the emergency COVID fund from the UK for their structural fund, given the cost of the new stadium, right? And I do think the banks have a role to play here. The moratorium for 6 months has been very helpful. I think from Europe, it's not likely to go beyond that period. And therefore, I think you're going to see, customers under pressure in the coming months, which will lead to restructurings. Hopefully not anything like we saw in the financial crisis, but it is going to be a difficult period. So therefore, for all those reasons, getting access to capital is very important. And, it's very positive to see the subscriptions from NTMA last week, where Ireland could have borrowed 60 billion at effectively zero. and how we get that money into the, and maybe as a personal view, you know, we've done great work, and maybe that's where, if you put a bit more of that in the system right now, and there's lots of those supports out there from Europe, that for me probably is the right tactic at this point in time. Sorry, it's a broad question now that I've...
No, it was, and it is very broad. I suppose narrowing that down a little bit, I suppose, and making it kind of relevance to a significant part of our audience this morning. The last decade has kind of seen an unprecedented demand and a positive demand for accounting graduates, and the subsequent career opportunities have been excellent. I suppose I'd be interested to get the panel's perspective on the job and our opportunities available in the accounting industry for graduates going forward.
Yeah, I can pick that one up, Michelle. I think there are some lessons to be learned from the last crisis, you know, in that we will come out of this in due course, and it's about being ready for that. So ourselves, like Barrie mentioned, we're committed to our pipeline of people coming through, and next year's grad program also, because we need to ensure that throughput of accountants is there. So, you know, we're positive about the longer term outlook and our role as a training firm. So I mean, I'd be bullish that, you know, you'd always need accountants, and our role in ensuring that we support the market in that regard that hasn't changed.
Okay, I think so. Barrie, have you anything to add to that? Are you happy enough? Would you agree?
No, I think we're in we're in a very similar space. Yeah.
Great. Yeah. I suppose if I was just to finish off, and I'll direct this one to you, Declan, first, and I might do something similar to Barrie. Declan, the last 3 months have, the word unprecedented has been used too often by too many of us at the moment. But I suppose in the last 3 months, is there anything that has surprised you about PwC? And what you've learned about yourselves as an organisation, and the Cork office in particular, maybe around your teams and how they've interacted and engaged, kind of.
Yeah, it's probably just the ability to adapt, you know, because this was something that nobody knew was coming clearly, you know. So it was such significant change, effectively overnight, about getting people to work from home. And again, echoing some of Barrie's comments earlier on the technology, this was the real test for the technology. We could never have done as a pilot or a test phase. We did it in reality, and it has worked so far. I mean, clearly, it's not without its challenges, you know. But I mean, largely the experience has been good. And on the audit side of the house, you know, we've been able to deliver audits. But look, you know, you see some clients who weren't as well up the curve in terms of their technology investments, and it has been harder for them to flick the switch when we needed to go to working from home. So I suppose that bit around the adaptability and the resilience over the past couple of weeks, I think has been good. And we'll see a permanent change here. I think there will be an appetite go forward in the new world to have some level of working from home in arrangements. So that would be one of the positives.
Okay, super. Thanks, Declan. Similar question, Brian. I'm going to change yours a little bit. I'm going to ask you, what have you learned about yourself in the last 3 months? Your leadership style. You know,
I first of all, I agree with all the comments made by Declan, actually, and I think that word resilience comes out across the team. And, you know, from, you know, trainees just in the door to placements right up to the partner group locally and nationally, supporting each other and getting on with each other has been critical, right? I think for myself, I can't underestimate how much communication's been involved over the last couple of months, and I keep trying to do communication, but I'm also challenged myself: have we done enough? And trying to stay connected with people and keep them up to date with information as things are in this level of uncertainty. Because I think people do appreciate the updates, you know, and it's great now to be in the conversations about how we return to work. You know, what way will that work? How that might be a blended model, some at work and some at home, you know, complying with the safety requirements, which is the paramount priority and safety of our employees, right? And I think for me as well, I look back over my diary last week, and, you know, if I look at May, June period last year, I've done everything I did then, but I've done it very differently. And have I been less effective? And in some ways, I've probably gotten through it all. Have I freed up time that I can use differently? Some of that family time, actually. Do I miss the interaction in the office and maybe meeting clients face to face and that bit of the network? but there's little bits of what we used to, I think we need to bring with us as well. And I think for me, it's that trying to get that blend over the next while now, and not just defaulting back to the way it was.
Yeah, I agree. I just picking up on your comments there. I think what for graduates and for all of us, but for graduates particularly, a big message has to be that communication skills are going to be paramount going forward. So the ability to communicate with clients in a digital and a face-to-face manner is going to be more important than before, I would imagine, and will feature higher up the agenda, along with those technical skills that I suppose us in UCC are very often more concerned about. It'll be a lesson to kind of adapt and to incorporate that into our programs as well going forward, I think.
Michelle, can I say a word there, if you don't mind?
Please,
so I'd just like to, something that Barrie and Declan have touched on consistently through the conversation is, some businesses were lower down the chain in terms of their technology, and they need our support now more than ever, yes, particularly from the government and their local enterprise office bringing small businesses online. But, as we begin to go back out to shop, think small businesses, think local. If there's not an online opportunity, find the shops that are open that you want to support. Don't just look to Amazon and look to shop online like that. Try and support local businesses wherever possible as they open up again.
Absolutely, completely agree. Gentlemen, but I've just noticed that it's all gentlemen that we have on the call. Thank you sincerely for me this morning. I really enjoyed it. It hasn't been half as difficult as I thought it was. It was actually a very enjoyable morning. And I look forward to working with you all. And thank you all again. And the audience at home, I hope you found it a benefit. And we'd love to hear from you and tell us what you found of it, and what, if there's anything else that the business school and the accounting department in particular can do over the next couple of weeks in terms of the Cork region. Please don't hesitate to give us to get in contact. Okay, thank you everybody.
Thanks, Michelle.
Thanks very much. Thanks.